Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC, January 21st and 22nd, 2024. Tickets are in the description below. They are now available, so be sure to get yours. And today, our guest is the President and Chief Investment Officer of Rosseau Asset Management and an investor in the commodity space with over 37 years of experience. Few people have been doing this as long as him, and that's why I always love talking to him. It's Mr. Warren Irwin. Welcome to the VRIC channel.
Well, thanks for having me, Jesse.
Thanks for being here. And I want to get started. These days, I'm asking a lot of guests about the broad economy and where they see it headed in 2023. We're seeing a lot of predictions of recessions, of deflationary depressions, of stagflation. It all seems pretty doom and gloom. There's a few people I chat with here and there that don't think things are going to be so bad, but I'm wondering what your view is.
Yeah, I'm sort of taking it every day as it comes. The issue, one thing I learned, I started this business in the bond business, and I was one of the top bond analysts in Canada. And it's as a bond analyst, you really focus on the economics. I listened to the finest economists of the day. They made tremendous cases, and I thought they were brilliant as a newbie in the business. And then everything they said, like I remember one guy, Lacey Hunt, I was just so impressed with him when I first joined in the business. And I said, man, this guy has got it dialed in. He's super smart. I know it. And then nothing he said ever even remotely came true. Okay. So given that, what my thoughts are is looks like inflation right now in Canada is being tempered, which will be good. We just need the interest rates to stop going up. But, the Americans like to spend like crazy. So there's going to be some rate pressures in the U.S. until people slow down with their spending. But there are some signs that things are slowing down. So the Fed will have a tricky role here to try and, slow things enough to back inflation off, yet not crater the economy. So it's a matter of how good a job they could do in predicting what's really going on in the economy and not over tightening. But if there isn't an over tightening, we could definitely head into a recession, and the magnitude of which will depend on how closely they've been able to nail it as far as with the rate and inflation trade-off there.
So we had an epic conversation on my show the last time we chatted commodity culture about the uranium space. For those who haven't heard your stance on investing in uranium, we'd love to hear it, because I know you're a bull on uranium, you're a bull on nuclear energy, but you think there's a lot of speculative frenzy in the sector that could potentially leave a lot of investors hurting. So could you talk to us about that?
Yeah, the current group of uranium speculators are some of the most rabid speculators I've ever seen in my entire almost 40 years in the business. They are lunatics. And why they're lunatics is because they're all expecting the big run up to 140, and they're inflation adjusting 140, back when it happened in 2007-8 timeframe. And now they're saying, well, if you inflation adjusted, it's going to be $200 a pound, and I'm going to make so much money in these crappy little uranium companies, all rich, and I'll have generational wealth. And so they're getting all pretty jacked up, right? But if you take a look back, okay, realistically, okay, at the last uranium run, Paladin, it went from like a nickel dime to $8, but then went right back down again. There was zero value created, zero. You look at the 400 to 600 uranium juniors that were created last time, like almost all of them went to zero, right? So I don't know why everybody wants this previous rally to happen again. I guess everybody says, I'm not going to be the sucker holding the bag here. I'll be able to pick the top. So that's the frenzy that's happening now. And what people forget is the reasons behind that run were, floods of Cigar Lake. Cameco's, one of Cameco's two big mines, it flooded, and I think the Ranger mine also flooded. So there's big supply constraints and force majeures happening. And then, so we had a run probably to like 70, $80 range. And then what happened was the speculators jumped on board and they ran it to 138. And even at 138, if you look at the volumes weren't very big that traded there. So it was a fantasy rally. But meanwhile, the promoters and the shills got out there and just raped the market and took millions and millions off the table from new unsuspecting investors. So who's the new group today that wants to speculate in the sector like that? Well, they're the people that didn't get smoked back in 2007, 2008. Now, if you want to make money in the uranium sector, why would you want to listen to me? Well, I believe I've made more money I've made more money in the uranium sector in the last 7 years than anybody I know. I caught next gen, and I was reasonably positive on the price of uranium, but I wasn't, that wasn't the reason for it. I invested in a good, solid, fundamental company that found a whole bunch of uranium, and it was going to be worth a lot of money, whether the price of uranium was flat or not. I pulled out $90 million for my investors on that. That's a good chunk of change. There was actually value created. They're now a $3 billion company. That's $3 billion from virtually nothing, created with good, solid exploration by good, decent people. And here we are today. They've created $3 billion. That's how money is made in this sector. But everybody's really, really focused on this big ramp. It's going to hit $200 and all that sort of nonsense. And, it may get there with the frenzy, but the reality is, that's not the way I've made money in the past. And I just don't think the factors are going to line up, because we're not having massive, anyways, who knows what's happening. There seems to be a lot of people getting all geared up to run uranium, and they may run it. But when you look at the supply demand fundamentals, we've got 30 million pounds of uranium coming at us with next gen when that gets fired up. Uranium buyers are multi-year buyers. They're conservative buyers. They're not going to be ramping it up. It'll be speculators that do it. And you look at the demand side. Well, guess what? When's the last time you heard of a nuclear reactor being permissioned in either Canada or the US? It just is not happening that fast. There's just a few here, a few there. China's got the major build out. It's 50 right now under construction, is the best estimate I'm getting. But it's on a base of 450. And if they come in over the next, 5 years or so, that's not a tremendously massive growth rate. It's not the growth rate you're seeing in other things. It just takes a while to build demand, to build these reactors. And meanwhile, while you're trying to build them, then there's old reactors that are timing out and they need to be shut down. So the demand side is not super great. On the supply side, we're seeing 30 million pounds coming at us before too long. So I'm definitely positive on uranium. Do I think there's going to be this monstrous spike? I don't. But if it does happen, and it'll be driven by speculators who really don't know much about the business or the supply-demand fundamentals, what you do is just realize you're in a hype and remember what happened last time, that you got to get out. And I remember at the VRIC conference earlier this year, people said, well, Warren, when should I get out? And I said, well, when you start hearing 200 uranium juniors are out there, because the world doesn't need 200 uranium juniors. That will show that there's a significant amount of hype in the market. And at that point, just say, listen, better start moving out of my uranium companies.
So what are your thoughts on the new physical uranium funds coming onto the market? And do you think they will have a measurable impact? We're seeing Zuri invest out of Switzerland and ANU Energy out of Kazakhstan. I spoke to Mike Alkin recently, and he says he is aware of several other physical uranium funds preparing to launch. Does this change your thesis at all in terms of that the spot price could actually be, and long-term contracting price could end up going a lot higher because of these new vehicles coming onto the market?
It depends on how much money they're able to attract. And in this market, you're seeing the frenzy in lithium. In previous markets, we've seen a frenzy in cobalt. We've seen a frenzy in weed stocks. They all end badly, but if it's the flavor of the day, you get a bit of a frenzy. I don't know how much money these guys are going to run. Again, my outlook on uranium is positive. Nuclear power is the only option we have here. Can I predict the extent that these guys will create a frenzy in the market? I cannot predict it. I don't know how much capital they're going to be throwing at the market, but you definitely sell into that frenzy, because I'll tell you what, there's lots of uranium out there. I mentioned it to some other people that we've just staked 700 million pounds of drilled up uranium with a PEA already. 700 million pounds. That's a significant amount of uranium in a market that only produces 180 demands 180 million pounds a year. So on the supply side, I have a very good handle on things and where it's coming from. And there's lots of uranium in the world. There's no shortage. But then again, you look at lithium. And, you got the nutty frenzy right now in lithium. There's so much lithium in the world. It's crazy. But, a bunch of guys with a bunch of money decided, let's run lithium. So they're running lithium. But then again, even with lithium, the growth rate and the demand from electric cars is way, way higher than you'll ever get a growth rate because in uranium, because you can't build your nuclear reactors that fast. It's just reality. But can I predict what a bunch of lunatics with a whole bunch of money could do to this market? I'm not about to predict that. If they spike it, I own a good chunk of this 700 million pounds of uranium that Garrett Ainsworth just staked in Sweden not that long ago. It's going to get, the okay to. Sweden's going to lift the moratorium on mining uranium, and there's lots of countries around the world, Australia, Brazil, different places that have big uranium deposits with moratoriums right now. And it's just a matter of lifting those moratoriums. They've already been drilled out. Let's get them into production. So long term, any massive spike will not hold. So sell into it if it does indeed happen. Yeah.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
I know you're a bull on copper, and the fundamentals do seem to be quite strong at the moment. We're seeing this push for the new green economy. Obviously, all of the copper that requires, renewable energy systems requiring much more copper than a traditional energy system. Also, emerging economies, more people moving into a new middle class in places like India, once again increasing copper demand due to increased electrification. And not to mention the fact that these copper mines are so expensive and time consuming to bring online. So are you seeing the same things? And what are some of the main catalysts in your mind when it comes to the copper space?
Yeah, well, with copper, the reality is the bulk of the copper market is just, we've heard the term Dr. Copper, right? It's just standard, traditional, grinding away economic activity in, let's say, buildings and infrastructure, and whether it be electrical wiring or copper piping. So some people are saying, well, we're going to get this massive run in copper because of electric vehicles. So I'm going, well, yeah, well, I've yet to see any significant announcements, let's say even in North America. The crappy electrical grid in the US, it definitely needs to be completely rebuilt and re-engineered. Have I seen announcements on that? No, I haven't. Is it tough? Like, grids around the world need to be revamped, re-engineered for a new electric world. I've yet to see announcements on that. They're sort of doing it a bit backwards because they're now getting all excited about electric cars. But as you know, in California, they won't let you charge your electric car because there's not enough power. But then you look back and say, well, there's no power because there's no transmission. But even if there was transmission, there's not. When's the last time you saw a nuclear power plant permission in a left-winging nutty state like California? Like, they want their clean energy, their electric cars, but nobody's willing to build a power plant, nuclear power plant, to power all this nonsense. So anyways, so that's why I think the price of copper has been kind of dead in the water here the last little while. Am I super excited about it because electric cars, electrification? Well, I'm not seeing the dopes really moving super fast on that. So I own some copper. Copper's a real tricky one to make money on, but I've been involved in some big discoveries. One of the top 5 undeveloped discoveries in the world is Sol Gold. I'm a big shareholder of that. But are we getting the BHPs and Rio Tintos all over us to buy us? We'll get sold, but I don't know. I'm just not seeing the frenzy on the buy side on the copper yet. I see the Chinese wanting to buy it. Now, here's the risk with copper, especially if you're buying a Canadian copper story, is this whole strategic metal stuff. They won't let you sell it to the Chinese. Well, I'm going, great. Then the Chinese, if they're unable to buy it, we're unable to sell it to the Chinese because we're a Canadian company, because it's strategic metal, then who buys it? Well, when's the last time you saw a Western mining company buy a big copper porphyry and wants to commit, $5 billion, whatever the number is, to building it? It's not happening. So there's a real disjoint between the narrative that everybody's talking about. You saw Robert Friedland did a great little video here the other day, and you get all jacked about copper, but I'm not seeing it at all on the ground in terms of any excitement about building copper mines. And then forget about you find a mine, then where are you going to smelt it, right? Like, when's the last time a smelter's been approved in North America to smelt copper? Well, like, the world is pretty nutty, and there's more hype than reality in a lot of this EV nonsense, frankly.
Yeah, I like that balanced view. And I do agree that when it comes to a lot of the aspects of the new green economy, they're putting the cart before the horse. A lot of it's political ideology, a lot of it's politicians trying to grift, and there's money being made in all of it. Now, I want to talk about cobalt because you mentioned that there has been a mania in that commodity as well. And when we spoke prior to the interview, you said that's not a commodity that you're bullish on. Could you talk to us about what you're seeing in the cobalt sector?
Yeah, the big thing with the cobalt, right, is 80% of it comes from the Congo. And the Congo is a really, really tough place to operate. And there's also, the NGOs are all over people about, child labor and things like that, right, in Congo. But a significant amount of Congo comes from, a significant amount of cobalt from Congo comes from, big mines run by the big guys, right? Congo's a fantastic place for metals, and there's some serious metal coming out of there. Robert Friedland, what he did there is truly unbelievable. Of course, he again partnered with the Chinese, right? Not a Western company, which seems to be the theme, certainly in Africa. So problem with cobalt is it's expensive. It's only sourced for almost all of it's almost sourced from just one country in the world. So are we going to base our entire electrification of the transport system based on cobalt? Not a chance. So every engineer right now in the battery space is trying to engineer batteries out without cobalt, right? So cobalt is not going to be in batteries here in, let's say, 5 years time or whatever. They're trying to phase cobalt out. So do I want to jump into a commodity that takes 3 years to drill out, 3 years to get a permit, 3 years to build the mine, 3 years to get your capital back, and then we're ready here to make money, but nobody cares about cobalt? Cobalt will continue to be a good metal. It has applications around the world that will still need cobalt for. Am I jumping on it as a battery metal and massive demand growth and things like that? I'm not jumping on it because I know that they're trying to phase out cobalt in the battery metal space.
So what about nickel? Because this is a commodity we've spoken about before. You gave a presentation on it at the Vancouver Resource Investment Conference this year. So tell us why you think nickel currently presents an opportunity.
Yeah. Well, I watched Robert Friedland make a fortune for investors in the early 90s when I was just a punk kid starting out. I was just coming out of MBA school and didn't have a lot of cash, but I watched people make tens of millions of dollars. I had one buddy, he made $70 million and kept it in Voisey's Bay. So as a young kid, I saw that. I said, I'm going to look for the next nickel sulfide big win. And, I'm looking and I'm looking. Here we are, 2023. And I started looking in 1994, right? So that's a lot of years. So nickel sulfide is good. Big nickel sulfide deposits are extraordinarily rare. We're talking makes many, many decades to find a decent one. And what I've been looking for it is they're just so rare to find. So I've been looking in Sudbury. I've been looking in the Ring of Fire. I was involved in Noront for a while, but it's clear that Noront's not going to be the scale that I'd like to see it be on the nickel front. They got some amazing chromium, which I think is outstanding. But they got some great nickel. But I was looking for the monster nickel discovery, and I'm agnostic as to whether you could. There's big demand around the world for nickel. If you want to use it for batteries, I don't care. Would use it for whatever you want. But all we know is nickel sulfide. They're always really, really tough to find. And the reason I'm excited about it, I've been excited for 30 years on it, and I've finally found one that I think is worthy of jumping in on, and I've done that. And that was my number one pick at VRIC this past year, which is premium nickel. And there's a tremendous opportunity in here now. I think I was around $1.75 when I recommended it. I think right now it's $1.40, so it's come off a bit. They screwed up their financing. The stock got hammered hard. And I'm in there buying it like I think I own 6.5, 7 million shares now. It's a tremendous value. And, I'm not recommending this to anybody. I have a lot of experience in nickel sulfide. I've looked at a lot of deals in 30 years. Trust me on this one. I've had some really smart mentors teaching me about nickel sulfide. I have never seen anything like this, but I encourage anybody who cares about looking into this, do your work. You'll figure it out yourself. Do your own work, figure it out. The help I could give you is just point you in the right direction. Look at premium nickel. Decide for yourself whether this is something you think could be meaningful, but I think it could be a multi-billion-dollar win here, and I think the market cap's around 200 million Canadian. So there's some significant upside here if things turn out the way I think they may. So do your own work, and no guarantees as always in the mining business, but I think it's a pretty good place to get focused.
Well, let's talk gold and silver now. You have a ton of experience in the gold sector. When we were speaking prior to the interview, you said you understand that commodity at a very deep level after having so many years of experience with it. So could you maybe share with us your view on gold and the gold space at the moment, and also give us your outlook for silver?
Yeah, I don't follow silver. It just tags along with gold, plus or minus. So I don't look at it differently. But let's take a look at gold, okay? Why should you care about my view on gold? I've made the majority of my money in the last 25 years at Rosseau has been in the gold market. Prior to that, I made a massive amount of money in the gold market, trading it around. Okay, so I've been around the gold market for a very, very long time. I've listened to Rob McEwen and his $5,000 gold predictions and blah blah blah, and I've listened to all the baloney predictions on the price of gold for my entire career, not unlike the Lacey Hunt example when I was a young kid. I've listened to economists my entire career, and they're full of baloney and they're never right. So, and none of these pundits on the gold front are ever right. Okay. So let me tell you what I figured out through a lot of heartache. Okay. Is to make money in the gold market, I ignore the price of gold. I focus on good gold projects that are going to go from 0 ounces to 5 or 10 million ounces. That's how I make my money in the gold market. That's how I have made my money in the gold market. Do I know many people who have made money predicting the price of gold? No, I don't, because it's tough to do, and it's a real mugs game. Now, here's the thing about the price of gold. The price of gold, the best analogy I could get is over the years I picked up one, which was basically 1 ounce of gold will buy you a nice suit. Now, in the 1930s, it would buy you a nice suit. Back in the days of the Vikings, it would buy you a nice suit. Maybe not a nice suit of armor, but a nice little going out for dinner Viking outfit, right? So there's this trend, and it's basically due to the purchasing power and the cost of, like, you look at, to produce gold, you need diesel fuel, you need steel, you need people, you need everything that's all impacted by inflation. So it just chugs along here as our clown politicians print money like crazy. The price of gold gradually goes up in value as the fiat currencies are printed. Now, where people get excited is the price drops below that trend line, and people get all super excited, gold's going to go up, and then it runs up and it goes above the trend line. Then they're thinking it's going to continue. Well, it's not going to continue. It's going to go back down to that long-term trend line. There's a long-term trend line in gold, and if you fall for it, that you could actually predict it, or you get suckered into like the big rally in the early 80s where people paid $800 an ounce for gold. Well, I guess I don't know how many decades it took to get back to that. Because what happens too is there are a lot of people, let's say in India. India is a big consumer of gold. And the Indians have no qualms. If gold gets carried away and the price of gold gets too carried away, they're just taking the jewelry off their neck. They're throwing it in to be melted down and selling it out. And they'll say, hey, well, we know how this game works. We will wait the next 2 years and we'll find a cheap spot to buy gold, and then we'll buy our gold jewelry back, and then so there's sellers when it gets above the trend line, and there's buyers when it gets below it. So, but there is this trend line long term. So there you have it. That's the essence of the gold market. If you have any clowns trying to predict anything different, they're just predicting these ups and downs. They're trying to predict these ups and downs around the trend line, which are really difficult to predict. Long-term, gold is going higher, I could tell you that. And yes, it will reach the $5,000 that Rob McEwen said to me 20 years ago, but it's not going to happen overnight. It's going to just take some grinding out. It's going to take some more inflation. You got to get the money more money printed, but that's the essence of the gold market. And you look on the supply side, the price of gold gets too high. There's more indigenous miners in the jungles yanking it out. There's more mediocre projects being put into production. Then you produce a whole bunch more. Then, well, where's the incremental buying coming from? I don't know. Like, you get my drift, right? There's supply and demand, and it's around this trend line, plus or minus. And don't get too worried about predicting these ups and downs over this trend line. But there's a trend line. As currencies lose their purchasing power, price of gold just keeps chugging upwards. And don't get fussed with these ups and downs and stuff. And if you want to make money in the mining sector in gold, you buy good, solid juniors with good management team, the good, decent, honest people that are going from 0 ounces to 5 to 10 million ounces, and you'll make a boatload of money.
Well, thank you so much for joining us today, Warren. Really appreciate you sharing all that knowledge with our audience. Before I let you go, for those who want to learn more, could you talk about a little bit about Rosseau Asset Management or anywhere else that you'd like to direct people online if they want to hear more from you?
Yeah, well, sometimes we post a lot of the links on our website, rosseo.com, ROSSEAU.com. And I try to get out and do interviews from time to time when I have something to add. And I'm hoping over the next few months, there'll be some fun things happen in my investing world that I could share with some people, and we could make a bunch of dough. But, leaving people with one thing is make sure you have a view, positive or negative, on premium nickel, because it's one to watch and nobody's watching it. And that's that's sort of my thoughts on that one.
Great. Well, I'll put a link to Rosseau Asset Management as well as your Twitter. I also recommend people follow you there. And thank you once again, Warren, for joining us today, and looking forward to our next conversation.
Thanks a lot, Jesse. Great chatting with you. Cheers.